locked in to the Cash Flow Show with Dave and Nate, the best place to navigate how to achieve capital appreciation with commercial acquisitions. Here's your hosts, Dave SEYMOUR and Nathan Amaral.
And we're back.
Hey, bud.
What's going on, Dave?
Another week.
Another day, another dollar.
The flying. Do you know we have a new president?
Did I know? It was kind of hard to not know because I think a lot of people were anticipating something to happen down at Inauguration Day.
Inauguration Day.
It's coming.
Insurrection Day. Yeah.
Insurrection.
God,
I think a lot
they've all gone crazy.
It was crazy. Actually, I was just watching a video today from the New York Reporter. I guess they got their hands on a video, and you could literally hear the audio of what was going on from the people in the Senate chamber talking to the security guards. Yeah. It was like, what's going on?
This is probably not appropriate, but somebody told me that he left a dookie and didn't flush on the way out.
No.
Yeah, that's what I heard.
Man,
that's what I heard.
That's not fun.
I'm punchy, man.
Yeah.
Off topic there. Sorry.
No. There was one part in this video where this guy's like at Ted Cruz's desk and he's like, "Look, he objected. He turned on us." And then another guy reads the same document and says, "No, man, it's like this." And he's like, "Oh, I'm sorry, I'm angry." I'm like,
crazy.
You're looking all spiffy today. Where'd you go? You got your hair done. You're all clean shaven.
It's my money raising look.
Killer.
I'm a killer. You know what it is? Just to get off of the politics, onto the politics, off of the politics.
Yeah.
I had a discussion with a large, just a large investment group. They're coming into the fund, and the guy said, "You know what it is? Politics is just turned out to be far left and far right. That's all we hear about. We don't hear about the majority in the middle, right?
True.
Like the normal human beings." You know what I mean? And I think just the fear of finance, the fear of COVID, what we went through socially during the summer, it was like a perfect storm for stupidity. You know what I mean?
Yeah.
And it all came to fruition. So, with a bit of luck, sleepy Joe Biden and, VP Harris will calm things down a little bit, going right back into the Paris Accord, so we'll get some regulations back in there.
I mean, and what are the things?
We'll probably send some money over to Iran.
Exactly. We're going to finish sending money over to foreign countries. We're going to stop building the wall. I'm like, what?
Yeah.
Why?
Yeah, we need to print another $3 trillion in PPP. That's all we need. We're good. Wow, you're so cynical, Nathan. What's up, buddy? Do the thing. Do the thing for the newbies.
For the newbies, if you're new here, by the way, welcome to the Cash Flow Show. We are your hosts, Dave SEYMOUR and Nathan Amaral, and we are here to share with you great opportunities to help you build your portfolio through commercial real estate investing. And today we have a special topic about it's like a boxing match. Fundrise.
Boom.
Fundrise versus Fun. I was going to say something.
Just laughing at your own jokes.
I laugh at my jokes before I say them. It's a bad comedian, right?
That's not good.
It goes like this.
I appreciate the humor.
Fundrise versus Freedom Venture, round one.
It's like a cage match.
Exactly.
It's like a cage match. Who's that? It says Facebook user. What's up, boys?
What's up, boys? Thank you. I don't know who it is. I'm not sure.
It's just a Facebook user.
It's
they must be new. They don't even have their own name on their account.
Someone new. What's up, new person? We can't see you.
What's up? That's funny.
Oh goodness. So Preface it a little bit. So Fundrise, yes,
is an online funding platform.
Correct.
Tony Lonergan.
Tony.
What's up,
Oh man,
house.
what's up, buddy?
That's the Irish Mafia right there.
So
Irish Mafia in the house.
So good to see you, Tony. It's been so long. Well, hear you or see your text.
Hear you or just know that you're there. Yeah. So Fundrise is an online fundraising platform.
Yeah.
So break it down, and I'll tell you why Freedom Venture Investments is far superior.
Sure. Yeah. So what Fundrise is, so Fundrise is one of a few companies, probably like a good 100-ish companies or so that have been coming out recently after the Jobs Act signed by Obama back in 2016, I believe it was. And what they've done is they've broken down real estate investing, as they say, simple, low cost, and more powerful than ever, right? And basically, on a simple way to put this, it gives people the opportunity to get started investing in like big commercial real estate, such as, office buildings, and different types of portfolios. Sometimes they're new builds, sometimes they are retail office space, sometimes they're office buildings, sometimes they're apartments or mixed use commercial buildings. They give you this dashboard, they give you a mobile app. You can start off with as little as $500, and that can seem very appealing to a lot of people. All right. Because I can get in, which is nice. I mean, it gets people in the door, but they have no control over the deal at all. I want to make that clear. And let's go over maybe how pricing works. This is how their pricing works, which is right on their website. However, what they don't really tell you up front, which I know you and I have had this conversation before in the past, is they don't tell you like the fees if you want to pull out your money faster, like, okay, sooner than anticipated. There's like a term structure that's built in, and a penalty structure that's built in to that also. They've been around for about, 5-6 years or so, maybe a little less than that. And they're gaining a lot of growth with maybe more of the younger crowd, maybe because they have a mobile app and, the barrier to entry is a lot lower. But they have said multiple times, in different interviews that they are trying to get a larger base of people, or let's say larger investments from people. But that's been the tricky part. They're kind of working more on people who have maybe less than $10,000 or less to invest in their dealings, in their opportunities. So that is basically a summary of what Fundrise is.
Awesome.
Yeah.
Awesome. Look, we have a little bit of fun with this, Nathan, as we always do, right?
Yeah.
But, to put it bluntly, I don't want to tear somebody else down to build us up. So first of all, Fundrise is targeting an absolutely different investor demographic than we do at Freedom Venture Investments. So what will happen with Fundrise is various operators has an opportunity to put those deals on their platform, and then Fundrise is nothing more than a marketing company. That's what they are.
Right.
They're a real estate marketing company. They control websites. They throw millions, if not billions of dollars at search engine optimization. And what they do is they have a lead capture process to funnel in everybody and anybody who believes that they want to invest in commercial real estate.
Yeah.
What you tend to find is it's so broad, it's such a large swath of commercial real estate that it doesn't help with education, right? It's a blind investment in the sense of I throw in $500 and hope for the best. You saw right on there a 15% management fee on all assets under management. Way to go, Fundrise! You're killing it, right? You're doing exceptionally well when you think about scraping off 15% of all capital deployed. Which that's their business model. The uneducated will come into that funnel process. Think to themselves, it's only $500 or it's only $5,000. I'm not sure how they structure their offerings. Whether they need to be, they're probably what's called, for those of you taking notes, they're probably what's called a Reg A, a Regulation A fund, a Reg A fund, a Reg A fund, man.
Reg A, man.
A Reg A fund, man, you're driving me crazy. A Reg A fund allows non-accredited investors.
Yeah.
It also allows the smaller capital investments from investors. Now, look, here's the deal. I would much rather have 100 investors at $1 million than I would 1 million investors at $100.
Right.
Okay.
Right.
And why? Well, here's a couple of reasons why. First of all, the cost of interacting and managing 1 million investors at $100 is exorbitant. So if the cost of managing that many investors is high, guess what happens to the yield and the return to the investors? It gets compressed, right? Whereas if I've got 100 investors with $1 million on quarterly distributions, I only need to create 100 distributions per quarter. I only need to create 100 K1s at the end of the year. I only need to create an infrastructure to communicate and keep our investors up to date on what's going on. Only 100 of them, so my overhead is lower. Look, we're proud, and I mean it sincerely. We're proud at Freedom Venture Investments of running a lean machine, okay, a lean operation, because it allows us to offer these targeted higher yields to our investors. The other thing I'll tell you is this: I would love for somebody to be able to get on the phone with the CEO of Fundrise and have a conversation.
True.
Good luck with that.
True.
Right? However, if you dial 781-922-4418, right? You know I'm personable. I'm the approachable CEO. I'm accountable. And being able to connect with me at the top of the pyramid of this company for education, for information, for direction of capital, I take a lot of pride in that. So we're boutique, baby. I said it before, I'll say it again. We are a boutique investment company.
And what I guess another difference too is because I've had experience with companies like this and others that we're going to talk about even in future episodes. And I've had experience in buying properties and so all over the spectrum. However, there's a few things that we could pick at, the nitty gritty stuff, some of the stuff you brought up. But first of all, like the fees, for example, the fee structure. That's one thing. So first of all, you got these are like institutional type properties. So we're talking like, if you could think of like a big shopping mall or if you big office building, a skyscraper, right? So those are just huge downtown metroplex properties. And what they've done is they've cut out the middleman. That's basically what they've tried to do, is cut out the middleman by automation and using these types of services, these software. The other thing is, for example, is the penalties of pulling out your funds early. But you've even said that in your fund, is that there's always you got to think long term with this stuff. You can't think I'm going to pull out my money in 3 weeks from now, 3 months from now. This is years. They're the same way, except they have some high percentages, high fees if you decide to pull out early. And I think a lot of people don't realize that going in because there's no marketing. That's not really broadcasted on the marketing. So I think that's really important too, because a lot of people who go in with a little, sometimes they tend to run into maybe some more emergency situations and they need to pull out sooner. And there's some fees that are incurred there. So
look, again, I don't want to be disrespectful, but that's amateur hour, right? My investors have legal representation that read through the private placement memorandums, the offering, the structure of the LLCs.
Exactly.
It costs probably more than $500 just to have my investors, if they choose to. Some don't anymore because they've been with us long enough. But the first time round, they'll have their documentation scanned and looked over by their legal team, and that costs more than $500 just in legal fees. So if you want to look, again, there's no right or wrong, it's just choice. They're targeting the younger generation. Well, guess what? The younger generation doesn't have the financial fortitude and or education to play in a bigger sandbox like we play in. But it's a great place to start, right? That's kindergarten, grade 1 through 3. We are, we're university level over here, right? We're a master's degree in investing. So,
it's kindergarten.
It all depends on how you want to do it. But again, look, for the bells and whistles, we use a software platform that allows our investors to come in at any time, any place, anywhere with an app to be able to identify exactly where their capital has been allocated. They can pull up their legal documents at any time in the back office that's allocated to them. They have their own data room when they go through one of our offerings. Now, that's the same whether they're going through our fund structure or whether they're doing a one-off syndicated deal with us. The platform that we use allows them 24/7 oversight of their capital. And you know what? I paid a lot of money for that. I'm just going to be frank with you. It's a huge investment on our part as a company, but we put that investment in place because it's transparency, Nathan.
Right.
It's what you're supposed to do in 2021 for your investors. So that's my take on that. That's my slant on how we look at our relationship with our investors.
Well, that's good. And I know there's a lot of people like searching for this stuff. I looked into some SEO, like what people are searching for on Google or YouTube in regards to commercial real estate and Fundrise. And there's a few other companies that we can talk about in the future that have come up in regards to commercial. So people are like looking for this stuff. So I thought that would be a great topic because, there's obviously a certain generation or a certain age group that's looking for this kind of information, but also educate people that are already maybe looking into these kinds of things.
You know what's funny, Nathan? I'm old school, brother. I'm old school. I wanna know who I'm in business with.
Yeah.
You know what I mean? Yeah. And I've built my reputation from the ground up. From the very first buy, fix, and flip, the first wholesale, the first multifamily. My investors know me. It's like Cheers, where everybody knows your name. But that's not going to change. I mean, we're laying the infrastructure right now for our second fund, which is $500 million, and I intend to be able to be accessible through that structure as well, be it in our online formats with Zoom updates with our investor pool, a communicative system which is responsive, right?
Right.
It's like those larger companies. It's like calling the cable company.
Right. Yeah.
Yeah. We'll get back to you between 4 and midnight if you're lucky.
This conversation reminds me of the shark Kevin O'Leary. How he's always said he has two phones. He has one phone for his family and his friends, and then he has another phone that he said about 10,000 people. Well, that was at the time he mentioned it. He's like, about 10,000 people have this number. These are my customers. These are my most important people. They have my number. When this phone rings, I know that it's business. And I'm like, that's a good one. Yeah, I really like how he broke it down.
Everybody I ever taught,
everybody
I ever traded information with for time and money, got my cell phone and my email.
Yeah, it's true.
And here's the point. A gentleman who came through an education program that we had a few years back, and it's probably 10 years now, just connected with me last week. He's killing it. I mean, he's kicking ass and taking names.
Yeah.
And he just turned around and he said to me, man, he said, you started my journey. And he was still in my phone 10 years later.
Wow.
And he said, I want to pay it forward. I said, what do you mean, Jay? He said, let's do a podcast. And the guy's got like the number 1, number 2 rated podcast in his market. For new investors. So we went back to the beginning, half-hour podcast on that.
Yeah.
And then we did a second podcast. What's it like managing a $100 million private equity portfolio, buying large apartment complexes in the Gulf Coast region of Florida? Thank you very much.
Yeah.
But it's like if that connectivity with investors and business partners is allowed to lax and to be non-responsive, then it creates problems. And I'm not signing up for problems. I'm signing up for progress. Yeah. So that's the way that we view all of this stuff. And again, I'll say it again, no right or wrong. It's just left or right. Do you want to just give somebody $500 and hope? Or do you want to invest with some maturity and have connectivity to your capital working? And that's a decision that somebody makes. It's up to them. Yeah.
True. Good stuff. Yeah, that's great. Very well broken down. I want to transition over into, before we go into the deal of the week, you sent me that link about the quote.
Yeah, I just found that really interesting. I kind of gave it a quick look. Okay. Can you just tell me who? I'll paraphrase it. You don't have to.
Well,
who was it who said it?
It was by Seth Klarman. Seth Klarman.
Okay.
He's the founder of a hedge fund called Baupost Group.
I think they're German. What do they got? Like 10 billion in assets under management?
Yeah.
I found this interesting. He said that the current market is like slowly boiling frogs. Right? That was the term that he used.
Yeah.
And what he meant by that is the investor community, stock market, as well as uneducated real estate investors, high level, Bitcoin, everything that we talk about. He said, they're the frogs. He said, and if you just slowly boil a frog, they have no idea of the danger that's around them.
Yeah.
They just go, it's getting a little warm in here.
Yeah.
It's getting a little warm in here. And then at some point, the water's boiling, and everything has just manifested itself into the perpetuation of what's been going on in the background. And the analogy he's drawing is that and the amount of capital, the PPP, not just in America, but the world economy.
Globally,
The global economy
so true.
is gently on a simmer right now. And as the simmer begins to progress, then, we're boiling the frogs. And his comment is, nobody's paying attention.
Yeah.
Everybody's just living 24 hours. And they're not really paying attention to what's next. And I just found that insightful.
Yeah.
That somebody with, 10 and a half or whatever it was, $1 billion, in assets under management is seeing some of the things that little old me sees.
Yeah.
Well, it's just thought.
Yeah, no, and it brings up a good point because it's something we've talked about multiple times here on the show. It brings up about what's happening. Obviously there's stimulus going out to people. Individuals who need to pay their bills and who've been laid off and stuff, and PPP. But there's also an issue to that where, again, even in these stimulus bills, we've heard, money going to other countries, but not just the United States. We're seeing other countries pop out stimulus money to their, societies.
I sent in my application for my second round of PPP.
You're going to get that?
I'm not going to turn it down,
P. Well, that
is
is
what's going on.
It is. All right, so we got a very exciting property here.
This is a sweet deal. This came back around. You know how some deals they come around the first time and you're like, oh my Lord, this is a beauty.
Yeah.
Well, that was this deal, and we're very blessed. It's about to come to us. We're first in line for this.
Okay.
We have the pocket listing, but I'll give you the quick highlights on it. As you can see, if you can scroll down and just show the picture again, Nate.
Okay.
I'll scroll up depending on which way you're looking at it. So it's a 40 apartment complex, and it's interesting because it's outside our buy box.
Is this the actual property though this time or no?
This is it.
Oh, okay.
This is the actual property.
Okay.
Yeah. This is the actual property. We are first in line. Unless you live next to it, you're not going to know where it is. So I'm okay with putting it out there on the NDA.
Okay.
But it's an A-class property, which is not in our buy box. As you know, with B plus with a core plus or a value add component. But this is an A plus, and the reason it's an A, it's in a bankruptcy scenario.
Okay.
So that's the backstory on it, and because of our track record of doing what we say we're going to do, we got the pocket listing on it. What's great about this property is it has been maintained as if it was fully occupied, inside and out, regular cleaning, landscaping. It's absolutely mint. It's practically brand new. Okay. So it was built in 2020, wood frame, pitch shingle roof, complex 2-3-story apartment buildings. So it's a nice 40 units, approximately 40,000 square feet. So that's the first indication. They're 1,000 square foot property apartments, which is large for this community. And the unit mix is a home run, 3-bed, 2-bath, stackable washer dryers, granite, stainless steel. It's a high-end property. It's beautiful. 15 minutes from downtown Orlando. It's being liquidated, like I said, as part of a bankruptcy filing. And as you know, those can take a little while. But we were just notified end of last week, I think it was. Beginning of this week. That it's running its course. It's going to be up for us to take down.
Okay.
So the demand for these 3.2s in this marketplace is ridiculous. We actually did a rent study last time we looked at it, and we're incredibly confident that this thing's going to be leased up within 40 days. I'll say now, 30 days of acquisition.
Okay.
The pricing on the units is $1,675 is a good rental price without pushing the rents. So rental income in excess of $828,000 for year one. We're confident we can take it down for 7.2. We're going to put some reserves in there for some minor repairs, some paint that we might do in there, but nothing too crazy. So the projected year one cash on this thing is 11.4, increasing up to 6.64 by year 5. Cash to close on it, about a $3 million raise, which is not a lot of heavy lifting. I got a couple of investors who may very well take this out with one check. Put it into the fund, or do it as a sidecar. We're not sure exactly which way we're going to go yet.
Okay.
But the equity multiple on it, as you can see, is almost doubling your money over that period of time. It's 2.81 targeted. And for those of you that don't know, equity multiple means the $1 you put in investment. At the end of the investment, you get the $1 back plus another $1.81. So we're very excited. I'm excited about this one.
Yeah.
It also has an option to peel them off as condos, and as the market turns again and Mickey Mouse is up and running and everybody wants to go to Disney, it could very well be a beautiful condo exit strategy, Airbnb, things of that nature. It's got so much flexibility to it for an exit strategy. So, yeah, we're excited, as you can tell by my voice. It's a beautiful deal.
Have you heard any news about when Disney is opening again by any chance? Have you heard anything about that?
No. Look, man, what's going to happen is when that news is out there, every idiot under the sun's going to start trying to buy real estate.
Yeah.
And when that happens, we'd have already taken down all of the low-hanging fruit.
Yeah.
So, it's having the foresight and the business knowledge base to know I got to execute sooner rather than later. Because look, I can predict the future. Guess what? Mickey Mouse will come back.
That's true.
He is coming back. He's in the gym right now doing push-ups. Minnie's doing Pilates and yoga. Donald Duck is drinking a beer and Goofy. Well, we know Goofy's just straight up Goofy. You know what I mean? But they're getting ready. They're getting ready, and it will turn again. I was talking to an investor in England. I'm bringing in some UK investors. I was talking to this guy, and he was weighing up whether investing with us or buying a Disney timeshare. And I said to him, you know what's crazy, man? I said, you do whatever works for you, but how about you just invest with us with some property close to
Disney,
and
instead of a timeshare.
Appreciation over time rather than a timeshare that you can never sell and that only depreciate.
Oh my God!
Yeah, it's just it's all knowledge, man. It's all information. So yeah, we're excited about this property going forward for sure.
Oh, that's great. Yeah, that sounds really great. And you guys have been picking up a bunch of properties in that area.
Dude, ask me how many LOIs Walter put out the day before yesterday.
How many LOIs did Walter put out the day before yesterday?
That's a great question, Nathan. 7 LOIs.
Dang.
7 LOIs went out yesterday.
Wow.
And we were on our partners call this morning. I think 2 of them have already been accepted. So we're into 2 more properties into due diligence.
Nice.
It's nice to bring in investor capital and know that you can pay quarterly distributions right off of it, like the money can go to work. Because that's our goal. That's what we do is, speed, it's velocity. We talk about velocity of capital. So yeah, I'm jacked up, dude. 2021.
That's awesome.
It's so good.
That's so good. That's good stuff.
Yeah.
Fantastic.
For sure.
Nice. All right. Well, this has been another great episode for sure. We got a little boxing match between you and
who won?
Well, I'm gonna say Freedom Venture. I'm not gonna, I'm trying to be in the middle here, but I mean, at the end of the day, it comes down to, what the benefits that the customer is gonna get, right? And you put it so well when you said direct access to, yourself. Walk through if someone has questions directly. They're not just put in a line. They're not just a number, and they actually get to. They could go see the property if they wanted to.
Sure.
But they get more of that hand-holding throughout the process, and the trust. The trust is there. They're not they're not just another number. They're actually someone, who you can connect with. And I think that's important because sometimes people have never done this before.
Right. Look, you can get us directly info@freedomventure.com. www.freedomventure.com, which is the website. Go there, spend some time there. There's some gifts there My number one publication download is there, no charge. And if you just want to get on the old rag and bone, which is Cockney rhyming slang for phone, get on the old rag and bone and have a chin wag, which is a conversation, then you can call me at 781-922-4418. And, we'll put something together for you. Well, I'll tell you whether it's a fit. I'll tell you if it isn't. And then, you can make some intelligent decisions from there.
Awesome. Good stuff. Well, I got the email down there at the bottom. Feel free to reach out to Dave at info@freedomventure.com. So good to have you here, everybody. Thanks for saying hello, and we'll see you next week right here.
See you, brother,
on the Cash Flow Show. See you guys.
Bye.
See ya.